let's pull up the stock of State Bank of Mysore. It's been one of the standout performers this morning after the company announced numbers yesterday. As you can see, it about almost 12% higher on that stock. That's a 56% gain, rising to 545, straight away from 500, a leap towards the 550 mark. What went right with the results? The profits looked very good, 102 crore versus 30 crore, though last year's profit was a bit depressed. Let's get an idea of how the stock and the company will perform here on. Sharad Sharma, Managing Director of State Bank of Mysore, joins us on the phone line. Mr. Sharma, good morning. Thank you very much for joining us. First, if you can give us an idea of the asset quality. We've seen a marginal increase in the gross NPLs. Can you tell us in rupees terms how much was the fresh slippages that you created, and did you restructure any asset?
I would say, during the last 3 quarters, we are seeing a steady reduction in our slippages. And if you look at the past concluded of September, we have not had a major account which has come in for restructuring. And if I can take you on a year-on-year basis, September, our gross stressed assets were 12.5%. That in September 2014 is down by 2% to 10.5%. And our gross NPA ratio is also showing a steady decline. Last year in September, we were at a high of 6.5% of gross NPA. We are now at 5.07%.
Okay. No, I take that point. We have your year-on-year numbers in front of us. But I was just looking for more color, the exact slippages number and exact restructured numbers if you have them. Because your provision has come down a goodish bit compared to last year. What is the provision coverage ratio standing at?
The provision coverage ratio is at 63%.
Was it different in the previous quarter? Has it increased or decreased?
In March it was at 60%.
Okay.
In June it was 65, and we are at 63 now.
Okay.
Okay. Can this trend of a decline, improvement in asset quality continue? By the end of FY15, can your gross NPAs dip below the 5% mark? What's your forecast?
Keeping my fingers crossed, but definitely we are nearly there at 5.07%. And each quarter in the last 3 quarters, as I said, even though in the last quarter there have been practically no asset sales which have happened, we have been able to, and this is an off-season. If you look at the credit growth, there has been normally a deceleration in the first half and an acceleration in the second half. So reasonably speaking, I expect to have at least around 5,000 crores growth in my asset book. And even in absolute terms, if the NPAs don't come down, I will definitely come down. But my target is to be in the range of about 3.5% to 4%.
By the end of FY15, in the March 2015 quarter?
I would say conservatively at 4%.
Okay. You were speaking about credit growth. What did you do by way of credit growth in the first half?
The first half we are down. That is mainly because of tepid or practically no response on the corporate lending side. And we have done a conscious policy. In fact, 1.5 years back, my corporate loan book was at 64%. As on September 14, that is down to 56%. Also because that's the off-season. But my incidence of NPA in the in the corporate loan book is fairly steep. And that was what was hitting the bank very substantially. So we are now doing a shift to the retail advances. And in Bangalore and in Karnataka, 80% of my branches are in Karnataka, and we have a strong retail franchise. We propose to use that to build up our retail portfolio, say in housing loans. My growth in the last YOY basis has been 20.6%. As far as vehicle financing, it is 21.6%. So that is where I will grow, and going forward, I do more on the MSE side also.
Now, what is your loans outstanding as of September 30th compared to what it was last September 30th or March 31st? Okay, by the time...
we are around 48,000 and we were 50,000 as on March.
Okay, okay. So it's a minor 2,000 crunch. How are your margins looking like, net interest margins for the quarter, and how do they compare with the previous quarter?
Our net interest margin are fairly stable at about 3%. We are fluctuating between 3% to 3.1%. For the September quarter, it was at 3.02%.
What do you foresee as credit growth for the second half? And what is your capital adequacy? How will it be after the credit growth?
My capital adequacy, as I have released, is at 10.73% as of September. That's because the half-year profits have not been factored in.
Okay.
If I factored that in, that profit, the capital adequacy will be, Basel III would be 11%. We also propose to approach the market for Tier 2 bond issue of about 500 crores. That will take care of the credit growth requirement of 5,000 crores, which I am saying. And so we should be around 11.25 to 11.5% capital adequacy.
No Tier 1 QIP, nothing. You're doing nothing to your pure equity.
Pure equity, we did a small issue last year to bring it in line with the SEBI guidelines. Okay. But as of now, I have some headroom available. Okay. And in terms of costing, it's fairly decent. So I'm looking at a 9.25 to a 9.35% cost of the bond issue. So I'd go for that at this stage.
Mr. Sharma, what's your forecast for the net interest income growth in FY15? Will it continue to remain in the single digits?
No, I see an improvement definitely in the second half because of, as I said, we had a decelerated asset level in September. Going forward, I see at least 12 to 14% growth in going up to March.
Okay.
That will help my interest margins.
Okay, Mr. Sharma, what will definitely help your margins will be if you cut your deposit rate like your parent bank has done. Are you contemplating any deposit rate cut?
In fact, up to the 1 year category, in the last 2 months, we have reduced our interest rate in 2 tranches by 0.5%.
Where do you stand for 1 year?
1 year and above, we are at 9%. SBI is 8.75%.
Yes, you're not planning to come to 8.75.
And I'm decelerated. My accent on bulk deposits or CDs has also come down.
No, I agree. I'm just asking you if you're bringing down your deposit rate from 9 to 8.75 anytime soon.
Not at this stage. Not in the next 3 months.
Okay, okay. Any merger plans with SBI? Anything you heard from the government, or do you stand as an independent entity for the foreseeable future?
I would say for the foreseeable future, I don't see any plans as of the government or from State Bank of India. Okay. So, I mean, we are alive and kicking, and we hope we'll be there for the next 1 year, definitely.
Okay. 1 year is a short time frame. Thank you very much, Mr. Sharma, for joining us with all those details.